Hello everyone and welcome. My name is Tim from the Camp Compound and it's time for our technical analysis video. Let's get right to it. In front of us we have the Bitcoin US dollar 1-day chart. I wiped my entire slate clean, so let's start from the beginning. What do we see? Well, obviously we have our low point here. We have a bit of a pierce through, but that is not too much of a problem. We've got our high point here, and again a bit of a pierce through. You could have a second one like this if you so desire, but the main point is we have a sharp turn downwards and now we're consolidating sidewards, which is not great generally speaking, because this would show generally a bearish flag. Now, if that were to come true, what could we expect? Well, let's drop a measured move right here, then Control C, Control V, and if we have a breakout from here, that would put us right about at the 10,500, which, well, would make sense to a certain extent. Otherwise, we also have like the 12,000 to 13,000 area to keep track of, because that would be the next major support zone, because that is where we spent a lot of time in the previous not quite bull cycle, not quite bear cycle, but the apathy in between. Like you can see here, this was really the main resistance and now it will be a main support. So that is kind of the gauge that we have for right now. On the other hand, what do we need for Bitcoin to kind of avoid this destiny? Well, if we want to see a break upwards, what we want to see from Bitcoin is basically a shortfall. And it looks like Bitcoin could be doing just that. What is a shortfall? Well, that is when you're in a range and the price just doesn't quite manage to get back down or get back up. So in this case, I forgot to turn off WhatsApp. There we go. In this case, that would be as follows. And I believe control, no, well, that would be something like this. We have this move upwards here. For the sake of illustration, let's just do this. We have a move up, we have a move down, we have a move up, and then we have a move that does not quite reach the low. We move back up, maybe another bit back down, and then we break through like that. This is a shortfall right here, this point. So as you can see, Bitcoin is currently not quite getting back down here just yet, but for that to continue onwards, for that to be a proper shortfall, we want to see Bitcoin turn back up. That is what we are currently looking at, or looking out for. If that does not work out, however, then we have our low point here. We would want to see, or we would be waiting for Bitcoin to break through and then continue back down towards here. Now, we have seen here one strike, two strikes. My mouse is, for some reason, not working. Obviously, it only does that when I'm recording, never when I am just, charting for myself. We've had 3 strikes. That generally means that this support is now a minor support. However, there has been some time in between, so on the next one it would count as the 3rd tap. That still is only a 50-50 chance whether or not it will hold, but combined with some other factors, you could look for a trade over here, or at the very least a scale in. That is kind of what we're seeing in Bitcoin right now. We have a bit of a smaller range within this bigger range, and we'll see whether or not this tap will break through. That is what we're currently looking at in Bitcoin. Let's quickly have a look at the 4-hour, where we see that we had another range right here, actually, which also tapped 1, 2, 3, 4, 5 times before it really started to break. And now we're back here at this low point, which makes sense because this was the next big level for the market, or at least the next important level. All of these aren't that big, it's just that there's so little volume in the market that, that very slight differences in price make the market currently. That is kind of what we're looking at for the moment. Let's continue onwards to Ethereum, ETH USD. And what we see here is fairly similar, to be honest. We kind of see this, well, this wasn't really a range, this was a bit more of a slight, not even a proper bear channel. It was just, yeah, kind of bearish movement upwards after a spike up, which, but not that clean. This is typical bear market stuff, where you see that there is a general trend upwards, but the market is in such low liquidity, there's so little happening, that it doesn't take too much for the market to make a wild swing one way or the other, like we see here and here. But the general gist is that it went upwards in a bear consolidation, or in a bear channel, actually. So yeah, the breakout here was not all that surprising. We are on the 4 hour, I am aware of that, but we do see that it hit this previous low perfectly. Just like Bitcoin is, well, a little bit above, Ethereum hit it quite nicely. You see a bit of a bounce, but this bounce does seem to be running out of steam a little bit, and then we would have another count. We have strike 1, we have strike 2. If we come back down now, that would be strike 3, right, well, let's say there approximately, giving us a decent chance, well, 50-50, of course, of breaking through again, and then we could see a move towards here, towards that 1170, and then back down towards 1060 to 1080 approximately, right about there. You could see a bit of support here at the 1150, right about there-ish. That is kind of what we're looking at here. If Ethereum does manage to continue onwards, we would want it to kind of break through this level and hold it above that 1220 to 1230, kind of there, and then it can grow on towards 1260 approximately, like right here-ish, and then onwards towards that 1300 where it's been having some trouble lately. Say there-ish. Yeah. And now let's move back out toward the 1 day, where we see that this all kind of makes sense as well. Here we have the resistance, another resistance we see here as well, that it had some trouble. Support, 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 all makes sense. But of course, Ethereum is also a proxy for the alt market. So what we do really want to show today is the Bitcoin dominance, which seems to be breaking upwards, which is generally not great when the price of Bitcoin is going down, but I'll show you in a second why that is. And this is the USDT dominance. Now that means if we have a market share of 100%, right? The entire market, entire crypto market is 100%, makes sense. Then we can divide that into 3 ways. Bitcoin, which is the Bitcoin dominance, USDT, which is the USDT dominance and is kind of a proxy for stable coins, and the alt market. So these are the 3, well, sectors of the pie. If Bitcoin dominance is expanding and USDT dominance is expanding, like we see here, it is trying pretty badly to break its resistance right here, which would mean that we go on higher towards this area approximately. And Bitcoin has room to move up to, let's say here, 43, well, let's take this one, be a bit conservative. 42.8 approximately. That has to mean that the alt market is shrinking. And that means that there is more pressure on alt markets, like we're seeing here. Solana minus 10%, ADA minus 2. We'll see a bit more in a moment. But we see that there is definitely pressure on the alt market, and this is why. This is why we want either the price of Bitcoin to rise and the dominance to rise, because that's kind of like Bitcoin raises all tides. The USDT portion will be shrinking, and shrinking, and then the alt market can be stagnant or continuing onwards. That's kind of what we're looking at here. These are the 3 pieces of the market that are continuously kind of warring for more market share. And we see that Bitcoin is definitely expanding upwards. We have that same idea here of a range, you know, a sharp move upwards, a sideways range, and now a continuation upwards, which could bring us quite far actually, because this is, well, let's say 40 and a half to make it easy for math, and this is 42, so it's 1.5%. That could bring us decently towards, let's say, the 53 and a half even. So that means a lot of pressure on alts. Speaking about alts, perfect segue. Here, let's have a look at A, for instance. We can toss out the USDT dominance for the moment, but we see that AVE is actually fairly stable. AVE just kind of does what AVE does. This one doesn't really work. There we go. We see here there's a decent support. It did manage to fail breaking out of its resistance. So it's not looking great, but at least it's managing to hold. So the really buyers and sellers are just in equilibrium. There's no excessive volume. It's really just waiting to see what the next big move in the market is, and probably move with that. If we do break down in A, we could move all the way back down to 46, where we'll probably scale in again. This is one of our open trades as well, so feel free to join our Discord and have a look at that if you're interested in how much of our portfolio is currently in it, and what kind of entry we've got. DYDX not doing too hot. We do see that it's making its second tap here, so there is potential for a bounce up, but it's not looking great because we also have this in the middle. It didn't really manage to tap its low. It's not really a triple tap, but it's not something I feel excessively comfortable about. Here we have the next major resistance, followed by, well, let's say here the 135, and then here approximately with the 150. That's kind of the layers in DYDX. We may get another scale in a bit, but for now it's not looking too hot for DYDX. So a bit of a revitalization in the market would be appreciated. And let's quickly have a look at Matic. I just talked to someone about Matic, hence the fairly filled screen. But what we see here, there's also a bit of a range. It's not perfect, but if it does break down, it could bring us all the way back down towards that 62, 63 area approximately. So be careful with that. We had 3 taps here. There was some time in between, so if we hit it again, that would count as a 3rd tap again in my eyes, which brings us back to the 50-50 level. And that is kind of the way you want to start thinking about taking trades and taking positions, in probabilities and with certain patterns, because that keeps the emotion out, because emotion is the #1 killer of portfolios. And I know that as someone who has blown up a few portfolios in my day, especially in my early days of trading, and it's not something I wish upon any of you. So be careful. That is kind of what I have for you today. So keep calm, keep cool, keep compounding. I'll see you in the next one. Bye bye.